Hello, my name is Rosario Rolandi. I'm in the car business for the last 23 years. And this time we're going to talk about first-time buyers. Who is a first-time buyer? How a first-time buyer can get a loan done? How much money you need? What kind of car can you buy? And what's the secret? How can I make this experience easier and more joyful? Again, my name is Rosario Rolandi. If you are so kind to subscribe to my channel, hit the like, and if you want to share this video, that's where more people can have more knowledge, because information is power. Number one, many people come and ask me, I have a credit score. I'm still a first-time buyer? And the answer is yes, you're still a first-time buyer. The credit score is just one part on the whole picture that we're gonna have. Probably you have a couple credit cards, one credit card, but if you don't have credit or car credit or house credit, you're still a first-time buyer for cars. If you never purchase a car, if it's a house, if you never purchase a house, you're still a first-time buyer. What it really means is that you don't have any experience paying cars, and the bank get really scared. And that is the secret. The secret is make sure the bank, credit union, financial entity will trust you enough to give you a loan. And these loans are not for $100, $200, $1,000. We're talking about tens of thousands of dollars. I know people say, I don't want an expensive car. But today's market, any car is $15,000 or higher. Years ago, it used to be $5,000, $10,000. Well, inflation is pushing car prices even higher. I mean, a decent car, it will be costing you $15,000 plus taxes and plates and whatever you need in order to drive the vehicle away. In the case, yes, even if you have a credit score, you are a first-time buyer. However, it will be helpful. Why? Because when we submit a deal to the bank, you probably, if we can get you an automatic approval, you're gonna be right there, and that is approved. However, you're still a first-time buyer. What you have to do is, in order to make your life a lot easier and the dealership easier, is bring your proof of income. Proof of income is your pay stub. How much money you make this year, how much money they're taking for your taxes, your social security, others. That's really important. The other thing that you have to be bringing to the dealership is proof of roof, POR. That means that any bill from the house, just to make sure that you live there. That's one of the ways the bank knows that you have some income. It can be, if you are self-employed, it can be a bank statement. The last 3 bank statements showing all the income that you are receiving. If you didn't do it yet, before to go to a dealership, make sure that you have 3 months of bank statements to start depositing all this money. That's why you can prove income. Now, the minimum income required is $2,000. Many first-time buyers are young people. They're living with the parents. They don't have debt. Maybe they have 1 or 2 credit cards, and that's great. However, your minimum income is $2,000. Now, which car is the right car? I have to break it to you guys, but the first car is not the dream car. In many cases, at least, that you has a lot of money, and or your parents or somebody next to you have a lot of money, and then they can pay for a large down payment. But if it's not the case, maybe in 90% of the cases, it's not your dream car. What this car will do for you is gonna be a nice transportation to take you to work or take you to school, take you around in a decent payment that you can afford. And that's really important. You have to know how much money you can afford. At the end of the video, I'm gonna tell you how you know how much money you can afford. It's really important in order to know what you can afford, but any decent dealership will able to help you with the math. And well, when they send it to the bank will tell they can afford this, and we have to find a car for this much. And the next question will be how much money down. Down payment, in many cases for first-time buyers, is the key that will open your credit. Why? Again, we have to make sure the bank will trust you, and it's not fearful that you cannot pay them. More down payment means that you are paying your taxes up front, your plates up front, dealer fees up front, and you can pay some of the car. Because if you don't pay, guess what? At least they're gonna have the car back, but they don't have to finance the taxes, and they don't have to carry on, the plates. That's why it's so important to have down payment. $2,000. It used to be $500. The other day I have a client, they said, my sister bought a car when she was a first-time buyer for $500. And it's true. A few years ago, I did it many times. There was a lot of programs for first-time buyers. It's not happening any longer. The $500 down payment doesn't go a long way because cars are more expensive, and now plates and titles cost a lot more as well. And with this new economic environment that we are dealing with, the banks are getting tighter and tighter. The banks wants is to make sure that they're gonna get paid. In order to understand a little bit this better, imagine that you have somebody move next to your house, your new neighbor, come to your door, knock at the door and say, hey, my name is so-and-so, can I have $5,000? And you say, $5,000, I will give you $10 because I don't know who you are and if you will pay me back. And that's the whole idea. That's why having some credit is really helpful. Having money down is really helpful. And having proof of income is really helpful. All this gonna make easier to get a car and find the right car. Be flexible. I mean, I know that you want your dream car that you saw on the internet, but we have to be realistic with the payment that you can afford, and we have to be realistic with the kind of car. I mean, everybody wants that beautiful Mercedes-Benz CEO S-Class for $300 a month. It's not happening, especially because you won't be receiving the lowest interest rate because you are a higher risk for a lender. For that reason, it's something that you're gonna be thinking in the future to refinance this car. That's why it's so important that the car that you pick, it won't be an older car, maybe 2-3 years older, and not too many miles. And warranty. So important to have a warranty because you don't want to be having a car payment and then a repair. It can destroy your credit. You're trying to start and then a bill of $2,000 plus your car payment. Many times you have to pick between fix the car or make your car payment. And that's why it's important the car that you're gonna buy has some warranty, even if you have to finance the warranty. That's why money down will help you with it. You cannot prove your income if they cannot find the right car for you. what's the next step? You're declined, you say, well, I will have to go buy here, pay here, what they gonna do next? If you have a relationship with your parents, a good relationship with your parents, they trust you, or your grandparents or some family member that want to trust you at least for a year. When you approach this, you have to say, please, I need help. It will be a short term. What they say 1 year, because your situation will be changed tremendously in a year after you purchase the car, because the bank knows that you're making your payments. At that moment, you can refinance and drop off the other person that co-signed for you, because you don't want to tie them up with you in a long term commitment like buying a vehicle. That's why whatever you're doing now and whatever car you can get now is just now. Your situation will be completely different in a year from today. You can trade in the vehicle for something that you like better. You can refinance that vehicle and get a lower payment, lower interest rate. And I have videos for it, really important. Just look at the previous videos and it's gonna tell you how to refinance that vehicle. And then you can refinance and drop off your parent, grandparent, or family member that decide to co-sign for you. And bonus tip that I was telling you about is how you know how much can you afford in a car payment. Number one, supposedly, that you receive $500 a week, it means you make about $2,000 a month. The bank will want to make sure they get paid. That's why they're gonna see, okay, this person received 500, but he not really, or she doesn't receive the 500 because they have to pay taxes and Social Security, all the other stuff they take from your paycheck. Probably you're receiving $425, $450. Depends the state where you are. I'm talking about Florida, or forget all to you in Bradenton, Florida. Now, if it's the case, you can afford just up to $450 monthly payment. Ideal will be you have a payment of $350. That's why you have an extra $100 to pay for your gas, because your car payment or your car expense is your car payment, gas, and insurance. And if you are a young person, your insurance is gonna be really high. I will recommend it to talk to your insurance agent and trying to see if you can be added to your parents' insurance in order to don't be that expensive. That's gonna be another thing that you have to work is your insurance. If you're an older person, but it's not expensive, but if you didn't have insurance before, it's gonna be expensive anyway. For the reason, you have to take in consideration how much will be your insurance. That's why expensive cars with larger engines, like an 8-cylinder, really sporty, your insurance premium is gonna be really, really bad. I see it all the time. That's why I'm saying make sure that you touch base with your insurance agent. Now, if you can pay $450, probably that's a nice car, a 2020 Honda, Corolla, Toyota Corolla, you know, car that dependable, good in gas miles, and you're approved for it, your payment is $450. Then the next week, the second week of the month, is gonna be only $450. That one has to pay your insurance, your gas, and another bill. That's how that works. Then you have another 2 weeks. Another week is for another expenses. Always thinking that you are living with somebody else and you don't have no bills. And the 4 week is just for savings. And that's a healthy economy. You need to live below your means. Means is always planning for future. It's nothing wrong to have a cushion, because in some point you move into another job, you have money for the month, or your hours are lower. In the case, you can pay for your car anyway, especially in moments of change like now that we're facing a recession, but you need a car. I mean, it is what it is. We need the car. We keep moving. We have to go to school. We have to go into work, maybe 2 jobs. For that reason, this video is important because it will help you to accomplish your goals and establish your credit. My name is Rosario Rolandi, and thank you for listening to me today. Thank you.